Stock snapping a 4-day losing streak just barely, with all three major averages finishing marginally in the green for the S&P and the NASDAQ. But it has been a dismal December. The Dow, NASDAQ, and S&P 500 all on pace for their worst December since 2018. But do today's gains offer any hope for a year-end rally or a change in the script? Let's ask CNBC contributor Joe Terranova of Virtus Investment Partners, who joins us here. Joe, a lot of kind of twitchy, jockeying back and forth type action today. We're sitting here with the S&P right around the minus 20% level from the all-time high. It seems like there's just been a lot of maneuvering under the surface. Hard to know what to pin it to. What's your read?
Well, let's focus on the positive. That's going to be that's the way I'm going to approach 2023. The positive of today, Mike, was that from a fundamental perspective, the market took a pretty good punch and stood it on its feet. And that was the news, obviously, overnight from the BOJ. I think there's a lot of technical mechanics that are right now impacting the tape. Clearly, last week, just remember 1 week ago, CPI 4,100, significant reversal. Then you follow that by tracing out a technical outside down week. So market came in really on its heels. Very difficult technical position. You still have the tax loss selling in the mega caps. We had Apple today go down and test its June low at 129.04. Did it hold? We'll find out in the next couple of weeks. Yeah. And then there's the puzzle that is Tesla. And obviously there's retail margin calls. Did, in fact, Elon Musk pledge his stock as collateral? Is that now being sold? These are all dynamics. These are all mechanics that are impacting the near term. And I think it's important for the viewers to understand that, because you want to maintain a degree of emotional balance. And let's remember one thing. I mentioned tax loss selling. What happens when the calendar turns into 2023? That tax loss selling, well, maybe not to the extent that it affected the market in the last quarter, but it evolves into some buying.
Right. It should, if nothing else, leave a cleaner setup for the new year, when you basically have the kind of price-insensitive sellers out there weighing on things. Now, just to get specific with Tesla, down 8% today, 155 million shares. This stock is down $700 billion in market cap from the peak. Clearly, there's an urgency to the exit that's going on. So you mentioned some of the potential factors, but in terms of whether that has coattails for other stocks, it hasn't really. I mean, Tesla right now is like 1.25% of the S&P. There was a time it was a top 5 market cap, and it seems like even though the rest of big growth stocks have not been strong, it seems somehow localized at the moment.
I think, again, that's why I want to be positive going into 2023. I want to look at markets, and I want to focus on the resiliency. There's a tremendous amount of resiliency in what's the negative price action for Tesla, and really a muted response for equities overall. I also think another dynamic that's unfolding is, let's remember, this is a positive quarter, not for the NASDAQ, but for the S&P. So you haven't had a positive quarter for equities in quite some time. You are seeing an institutional portfolio reallocation. It's unfolding right now, going out of equities into bonds, to a lesser extent into commodities, and even to a lesser extent going into alternatives.
Yeah, that makes sense.